Hey, everybody. Good morning. Happy Friday to you. Congratulations on the end of the week. Once again, hour past my target start time. I'm not a really good streamer, marketer, propagandist, but I'll try to get started around 9 a.m. UK time most days. I'm going to talk a little bit more gold today in light of the stream yesterday. I enjoy sort of just from one stream of consciousness to the next, from one stream to the next, updating things. Good morning, Anders. Good morning. I wish more people would think the same, my friend. I really wish. Peter Schiff in particular, I would love to debate him about all these ratios. I was going to bring this up as well since you're on now. This was a great. I don't know if you saw this. This was a great clip. 11-year-old Danish boy becomes the first foreigner to receive the Future of Ukraine award. Selling and handcrafting Easter decorations from last year, 34,000 Danish kroner to supply children in Ukraine. It's a wonderful moment here. Really wonderful. Zelensky greeting him, saying thank you, and taking a picture. Amazing what the Danish people have done for Ukraine. Really nice moment. Oh, wow. Very nice. Where did you see the city? Did I miss it? Or is it just Copenhagen, presumably? But you're sure it's your city? Ah, okay. Understood. Yeah, I mean, everything. No, I'm sure it was related. I'm sure he probably was. Perhaps that's where he met the boy. I'm sure that was related. Anything we can do to shine light on the heroism of Ukrainian people and people that are helping them, it's really amazing to me. One of the few YouTubers or people that's going to swing back and forth between Bitcoin and Ukraine. Going to continue. Same path. Plugged it in at about 109,000. I think we've dipped a little bit under that since I pulled up the model. But remember, this slight daily closes above the black line means we're pulling the black line back up. So it should give you more confidence. Everybody's got their theories on when this thing's going to pop. But just having confidence that, we're back above the trend line, which is a very solid mathematical trend line, I think is a good thing. So on to gold. Let's look at gold pricing. I've already forgot the charts now. Which one is this? There it is. Got it. Found it. talked about this a little bit yesterday. Someone asked. People have done this in the Dow. You can do it in the S&P 500. This is a backdated S&P 500. Really, S&P started up only in the 50s. Dow went to the 1870s. People have gone through, and I've gotten this data from Nick Laird. I haven't independently verified it. He's I think, since retired Australian gold fan, but also really worked at compiling this data. Basically, you take the S&P 500 or some derivation of what it could have been based on companies in the market before the 1950s, divided by the gold price at any given time, and you will get how many ounces or a ratio in ounces it takes to buy the S&P. You can do this with the Dow as well. You get the same effect. You should have immediate attention drawn here. This is the .com boom and bust. So what was happening here was stocks were at a relative all-time high and gold was at a relative all-time low. So a great move for gold bugs, or for anybody really. If you had stocks before the peak, sell the stocks, buy gold. Conversely, if you're at really low points here, like when gold went to $850 for 2 seconds in January of 1980, if you had gold, sell it and buy stocks. Doesn't necessarily tell you anything about the dollar in this chart. You do use dollars to triangulate, but this is just purely the stock market index divided by the gold price. And then you will get a multiple, which is ounces of gold to buy 1 unit of the index. So sell stocks, buy gold, sell gold, buy stocks when it's low. Ron Paul puts a lot of faith in this index. He's said many times that it was his opinion that the big one was not 2008, but was 2000. And he's basing it off of a stock market priced in gold. I think in truth, if like, I didn't start to think about or hear about this metric until, say, here. And even then I was still buying gold. It would have been better to buy stocks. Would have been better. All right. Sell gold, buy stocks when it's low. Sell stocks, buy gold when it's high. So when this thing is higher versus being lower, you want to be in stocks, basically. Are we going to have such a big peak now since gold itself is ripping? Stock market's ripping. It's very hard to tell, but it's an interesting metric. Here you see this is the eve of the Great Depression. Sell stocks, buy gold. All right. And really just to describe the ounces as well, like right now, today, it would take you nearly 2 ounces of gold. All right, so it's nearly whatever it is, $7,000. 666. What is the gold price right now? I don't even know, to be honest. Yeah, 667. So $6,700 roughly to give you 1 share of the S&P. And then if you go all the way back here, rounds almost to 0, but it's 0.1, basically 0.1 ounces of gold. So very, very cheap. So the trajectory is obviously up. For a little bit of analysis here, it's not that exciting, but this is an evolving linear regression, which means basically, I don't have a full straight line. I'm just sort of seeing how the tangent looks each month. This thing is trending higher, obviously. And if you look actually where we are right now, we're right on trend, interestingly. Gold bugs like this a lot. Whether they really follow it, I'm not sure. But if you were a gold bug and again, when it's high, sell stocks and buy gold. Is it high enough at this point to sell stocks and buy gold, even with gold at $3,300 an ounce? I don't know. If one had the foresight to understand this chart and, was heavily loaded in gold in 1980, sold all their gold, bought stocks, and then did the reverse in 2000, that would be probably, you could have been, I'm sure that trade would have done just as well as Warren Buffett ever did. Timing these bottoms is, of course, very difficult. And it takes a long time, right? Like maybe you would have thought the bottom was here in 1974. You entered that trade. Whoop. You had to wait 6 more years. You sold your gold too early and then bought later here. You never know. But this is just the general idea. Looking at the extremes here, so 1 sigma down, 1 sigma up again, roughly 2/3 of the time. If you're just curious, going back to the 1800s, because obviously it's a completely different scale here. You're looking at just 0.1 ounces the whole time. I probably need more decimals to look at it, but it's interesting, the Civil War in America. It was a sell gold, buy stock moment. And this was high growth in the United States, was the second half of the 1800s. So, as you would expect, stocks rise relative to gold. Booming period. But that level of rise is obviously so much different than here. And it just shows you, again, how it's very hard to value things over centuries. Like, another way of interpreting this is stock market is still, there's a lot of inflation that the stock market captures, surely, because all things being equal, you would only need 0.1 or 0.2 ounces to buy the stock market 100 years ago, 200 years ago. But now you need 10 times that amount of gold. There's a lot of things to say about price inflation there, I guess. But I don't really study this much. I don't know, the interesting idea to me is if you could sell your stocks. And buy gold during these peaks, but Ron Paul's a believer in it, but he's obviously a perma bull gold bug. Right. So just to reiterate again, this ratio being so low in March, the bottom of the S&P was actually here in dollar terms. 666 was the S&P index, March 2009. This ratio even went lower in gold terms, but like right here This is basically a sell your gold, buy stocks. Because gold was like $2,000 an ounce at this point, and then it traded sideways for 10 years. So Peter Schiff completely missed this. Not only did Peter Schiff miss the Bitcoin bull, he wasted precious ounces of his client's gold where it should have been invested in stocks, not in gold. Yeah, I don't know, Anders, perhaps. Maybe Bitcoin takes the wind out of everybody's sails here. I don't know. It's hard to say. It's hard to say to me. This is such a long term, like you wait a generation to get to the next top. Yeah, I agree. It's gold is a great thing where you can value other stuff. So even though, like right here, right, the gold was basically around $20 an ounce, or 1 ounce of gold was 1/20th an ounce of gold was $1. Another way to say that. Basically, all through this period, and then Roosevelt devalued here. Right here. It's interesting. It doesn't really change much for the stock market. That devaluation would be here. So again, when it's low, sell your gold to buy stocks. So stocks rose in terms of gold because of the devaluation. But yeah, I guess, again, it's very hard to tell. I guess my red lines are pretty decent for tops and bottoms, but you got to have conviction or a long-term view for a lot of this anyway. So let's take out the blue lines. I guess if you really want to be all in on stocks versus all in on gold, you go here. Anytime you sold your stocks here would be a win and bought gold. Anytime you sold your gold here and bought stocks would be a win. But again, this is an investor that only thinks in terms of stocks and gold. Yes, I mean, Peter Schiff, and I remember these days very well because this is exactly when he started to hear about Bitcoin, and he was poo-pooing Bitcoin, and gold was $2,000 an ounce. That was precisely the time when you should have sold your gold and bought the S&P. You would have done from 0.7 ounces of gold to 2.6. You would have done 4 times your money, basically, if you'd played that trade. And even an interesting little dip here with the rise in the gold price, right? But anybody's guess is as good as mine here. I don't know what you guys think. If you think this is going back to all-time highs, meaning just be in stocks, or if you think this was the top and this is going to go back down, better to be in gold. They're both inflation hedges, just in different ways. So another one now is I talked about this yesterday. There's gold reserves in central banks. All right, so as I said yesterday, we're getting to about $4 trillion worth of gold reserves in central banks worldwide, in governments worldwide. This actually counts up central banks and treasuries. Some governments hold gold in the treasury. $4 trillion. It's a little over 1 billion ounces of gold. It's like 1.2 billion ounces of gold at the moment. So again, here you see a $2,000 gold price gives you this spike in reserves, more than the reserves themselves. And now this huge run up in the last 2 years. Pretty interesting. So gold is very much part of the picture. In my opinion, more part of the picture than Bitcoin. Governments understand gold simply more than they understand Bitcoin, even if they want to poo-poo it or say it's not a real thing. I have no problem with gold, by the way. Obviously we like Bitcoin better, but. So here's a percentage of the money that they print. All right, so if you take this amount, what's the percentage of the money that they print? You see that they went to full collateralization. This is purely due to the price rise in the 1980s. So the amount of gold that governments held on their books because of the massive price rise in the 80s, it actually went over mark to market. And not everybody marked it to market. That's important, but went over the value of the money that they printed. And now it's been quite low, obviously, for, Alan Greenspan somewhere here said central banks stand ready to sell gold should the price rise. It's a very important statement that GATA, the Gold Antitrust Action Committee, loves to talk about. It's possible that central banks don't have as much gold as they say. It might be that they've leased it out, which means they sold it, but they expect to be paid back in the future. But they're so out of the money that they just forget it. If they do have all the gold that they say, the $4 trillion valuation is 15% of the monetary base now, which is way up. I've been doing this research since about here. And, I remember days when I was quoting 6, 7%, 8% of the monetary base. It's nearly triple that. So it's pretty interesting. In my view, gold is not like going away as far as the picture of like the monetary picture. But the funny thing is, and what you see, this is where I think we really see how early Bitcoin is. I'll put Bitcoin now in dark green. And you probably saw it when I switched, but you ready? Can you see it? So this is official government Bitcoin reserves right there. $50 billion, $57 billion. I'll take off the gold just so you can see it a little bit better. Even my software rounds zeros, so 0 billion doesn't even show up. Not a lot in governments. And then if you put the gold back, and remember we were 15% was gold of the monetary base. How much is Bitcoin? Rounds to zero. I think I said 2% yesterday. Again, this is my problem of doing math in my head. It's 0.2%. 0.2%. So the denominator here is the monetary base money, $26 trillion. So that is $57 billion worth of Bitcoin the governments hold is 0.21%. Yeah, you do have to zoom in, and I think that it's. Let's put this here. Look, even the percentage for Bitcoin is basically rounds to zero. All right, let's take gold off. So here again, super early, super underappreciated. A lot of bad press. I would dare say even that World Liberty Financial is quite bad press for Bitcoin. Perhaps a sovereign wealth fund strategic Bitcoin reserve is not bad press if the American people can take advantage of that and have more Bitcoin versus the debt burden. But this is a worldwide figure. This is not the United States. This is worldwide figures. So again, super early. If you're just sort of tuning in or you're not familiar with my stance on a lot of this stuff, is of course there's a lot of hype in Bitcoin, there's a lot of hype in crypto, but this is more of a stoic race than anything else. I mean, I was at a corporate day at BTC Prague and Saylor was speaking, and he said basically, he's concerned about educating governments, educating people that have more power than him. I think it's a rightful concern. MicroStrategy themselves holds more Bitcoin than this. The number is like 500 and something thousand Bitcoin in all governments in the world, and MicroStrategy has what, 600 and some thousand. But if you're thinking that just holding Bitcoin is going to, tomorrow moon, you have to understand that, it's not top of mind. Yes, they try to denigrate it and they write stupid papers that they say it's worthless, but which is ironic from them printing money ex nihilo. These money supplies will continue to go up. And they are huge. This is the total monetary base, which I was talking about. This is the denominator in the calculation that I was doing here. How much gold is backing the money that they print. So this is a liability, this number. For central banks, 26.2 trillion. That's how it works. It's a liability on their balance sheet. And this would be an asset for central banks or treasuries. Doesn't matter. Whatever gold is held in the vaults of a government is an asset backing whatever they're doing, whether it's issuing bonds or issuing money. It's the same idea. Gold bugs are happy. Been very happy with last year. Although, like I said, it's still pretty muted compared to, this was a very low number, right? Remember, this was probably the lowest in the modern era, right? We went back to 0.2 ounces of gold to buy one share of the S&P. You'd have to go all the way back to, the 1870s for that to happen before. And then here it went down to 0.7. I guess the next thing I should calculate is S&P versus the Bitcoin ratio, but that is a power curve. That is a power curve. Because everything in Bitcoin is a power curve. And also, when people talk about how, you know, Bitcoin is going to replace all money, well, first of all, it's got to get big enough to do so, all right? Because this is all money, broad money, all right? I added Britain, by the way, I think since yesterday's stream. So you can see Britain is largest money supply reported as M4. Why M4, not M3? It has to do with something of their building societies. Again, I don't really care that much, but whatever's the broadest money supply you try to get. The US doesn't even publish M3 anymore. This is my calculation. You can put it together from other data points. And it's probably bigger than that because euro dollars are not included here. But anyway, from what I can count, top 5 currencies is 115 trillion. Bitcoin is a $2 trillion asset. It will grow. I believe it will grow precisely because this money keeps going. But it doesn't mean this money will stop going up. But Bitcoin is comparable to this. In fiat terms, it's comparable to the base. This is base money, broad money. China is unbelievably huge. And that's only their M2 supply. China is such a communist country. I mean, they probably don't even have a burgeoning M3 money supply, which would be institutional money, brokerage accounts, money market funds priced in yuan. But obviously, it's huge. It's huge economic value. So my point is always just stay the course. We got time. I think we are early. This chart, in my opinion, shows we're really, really early. I forgot to actually put in the credit. This is my Bitcoin came from Rodolfo's Bitcoin treasuries. Back to the price. Nothing new from the last couple days. Been talking about this. Whenever the price does rise into this rainbow band area, the hot area, I think the 90th percentile and above area, which is 2x the trend, I think it'll be for 3 months. That's about it for today, guys. I don't know if you have any other charts you'd like me to pull up. One more thing to say about this gold in particular. All right, so Bitcoin rounds to zero basically, both in percentage and in billions. All right, got $4 trillion worth of gold in the financial system, meaning in central banks. Gold's not really in any bank vault. So this data I have going back to 1969. This is where I've started a lot of my sort of modern research. I have a lot of sporadic data from, the Bank of England back to the 1700s, Bank of Sweden back to the 1600s. Some pretty good data, but nothing really global or unified. I've heard Dr. Selgin, who's one of my favorite monetary economists, say that the best data that we have on a consistent basis of gold outstanding versus money is 40%. All right. Now he's talking about, I imagine, I'm not quite sure actually I remember this, but that should be gold versus all the M1 money or demand deposits. That's sacred demand deposit. So if we do M1, sorry, gold in central bank vaults divided by M1, it's a different calculation here, but typically this would be even less. Okay, because for example, let's say this percentage is the same with the United States. It's not, but M1 in the United States is something like $10 trillion. The monetary base is only $5 trillion. So this is gold in central banks divided by the monetary base. You get 15% worldwide. You'd get even a smaller percentage, is my point, if you divide it by M1 money. All right. So again, for the gold bugs, it's not like a silver bullet to what happens in banking. Banks like to leverage. They like to take risks. Sometimes it works out. Sometimes it doesn't. I'm pretty sure that Bitcoin is going to have a similar fate. If you think that Bitcoin is going to replace broad money, which again is 114 trillion today, and it's a little bit more than that, obviously, because this is only top 5. If we assume 80%, which is my monetary base full survey estimate, then we're getting up to 130, 140 trillion. So back to my ultimate chart, pulling it up here. One second. Okay, so here it is. Yeah, well, I can only see them losing it if they get capital called, margin called. Sailor wants to hold it for forever, which I think is a smart move. But if you agree with me that the as I have delineated here, we have TradFi based money and Bitcoin based money, or TradFi versus Bitcoin. You have that 26 trillion plus available gold, which includes not just central bank gold, but all gold plus silver. You get to this number that's 43 trillion, 44 trillion at the moment. Bitcoin's still only 4.8% of that. TradFi money is going to continue growing. Bitcoin's going to continue growing. It grows in that power curve. So, I think at the high end, 20 more years, at the low end, 10 more years before we get on a Bitcoin standard. But think about this money supply. It's going to keep growing as well. And I don't have an exponential chart set up for you yet for this. But this is at least doubling every 7 years, I'm sure. At least doubling every 10 years. 7% return at least, I'd say, blended. So as I just said, if if Bitcoin gets to 155 trillion in 20 years. That's two doublings on this. So 114 trillion going to 200 trillion, 200 trillion going to 400 trillion. It might sound astronomical, but 114 trillion was probably a huge envisioned broad money base when economists were working with broad money that was only 5 trillion in 1980. I think it's the long end, the longest. Anders is excited this morning. I put the triggering gold versus Bitcoin in the title. Good morning, Gio. Were you a gold bug back in the day, Gio? You've been a long time investor, as I understand. I don't know if you saw this chart, but if you were around in 1980, sell gold, buy stocks. 2000, sell stocks, buy gold. No apologies necessary. No apologies necessary. Yeah. And it's incredible when you buy bullion. You have 7% spread over spot charged by the dealer. Way different than Bitcoin. Bitcoin has pip fee spreads like currencies. Way different than gold. Another check mark in the case for Bitcoin. This chart probably is a good marketing for financial manipulation, right? Because if we just assume less printing technology here during these days, when an ounce of gold is roughly 1/10 or 1/5 the stock market, and then you get these wild swings starting from, obviously when the Fed was founded. These are a little bit mind-bending charts too, because right, you're not really thinking about the dollar or a currency. You're just thinking about broadly stocks, broadly gold. So theoretically, we're around fair value if you believe this evolving linear trend line, which is a fancy way of saying somewhat like the average, but not exactly. Um, I guess it's a holding pattern moment, but at the end of the day, this was a pretty good signal to buy stocks, right? Unlike what Peter Schiff said into 2010, 2011, pretty good signal to buy stocks, gold. I think Malta has pretty good tax regulations as well. Although the EU is trying to clamp down on their independence, their tax independence. I don't know. What do you guys think about this chart? Like, I think this is a big, big signal that we're early. If we all believe Bitcoin's going to be something huge, and we see the trends, but then if you look at the size of Bitcoin versus the base money supply, it's unbelievably small. 50 billion versus 4 trillion for gold. .2% versus 15%. Here, reset that. There you go. Got a decimal in here now. So 0.2%. Well, it would depend on the revaluation, right? How much you think they're going to revalue? 4 times? By the way, I think that's a total possibility. Much more likely, well, much more likely, but more likely gold than Bitcoin. Because they hold gold. It will help them. You know, you can theoretically revalue gold or devalue your currency. And you can take this percentage from, you know, 15% to 30% or 60%. Another good metric, which I need to get on, is the percentage of the money itself, which they've printed, divided by the debt. I have it more or less for the states, but I don't have it for um, the world. So this is basically the balance sheet of the central bank. This is now the asset side of the balance sheet. You see, they're not even revaluing gold. I mean, the United States in particular does not have gold valued mark to market. So if they did that, they would increase their balance sheet. I have not been following. Have they been saying that that's a real possibility? It was the Norwegians that were supposed to be making progress in thorium. If you watch the Netflix series Occupied, which I recommend everybody watch, Occupied, they get occupied by Russia with their thorium nuclear reactors and all their oil fields. But once again, if you look at a chart like this, plenty of room for them to come back and print more. All right, as a percentage, they hold only 18% of the debt, but they have held 28% in the past. So just like with everything else, there's always room for them to return. It'll be interesting to see if this falls as well. Foreign holders of treasuries. Obviously, generally it rises, but could fall. Did anybody think more about how Bitcoin contracts are going to be delineated? Remember, we have TradFi, which is here, growing in a straight line, 7.3% per year. Bitcoin, which is here, growing much faster, but in a slowly asymptotically declining manner. Still, by my projection, when it meets fiat-based money, it'll be growing by 18, 19% per year. But it will decrease. Are you talking about this? That's all right. I'll explain again. Basic idea is here. Everybody has a cost of capital. People hold capital. You want to invest it. When you invest it, you want to beat both inflation, but you also want to beat other investments. So it's the cost of capital. People have different hurdle rates. Could be 5%, 10%, 15%. People have different risk tolerance. You can pick any growth rate and assume a cost of capital from it. So that's what I'm doing here, basically. It's the growth of money. It's the growth of the supply of money in the world. 7.3%. It's actually kind of a reasonable rate, perhaps. If on balance, the stock of gold and central bank balance sheets increase by 7.3% per year, you should want to increase your investments, your assets by 7.3% per year. Bitcoin consistently has beaten that, but it will trend toward this number. But it'll take a long time. And if, say here we're on a SATS standard already by, 10 years from now, 15 years from now, and people understand that, okay, I'm basically getting the equivalent of 22% on my money holding Bitcoin every year versus investing in something else in TradFi, which gets you your standard exponential growth of 7.3% per year. Why would I invest in anything else other than Bitcoin if I get 3 times my money? When I say the cost of capital, no, it's just the return on asset. Return on asset. So it's very similar to the interest rate, but I mean, it's all different rates of return. So the interest rate is a cost of debt, which is a liability. Cost of capital, or ROA, return on asset, is a return on the asset side. Roughly, those things should equal or slightly. The cost of debt is a little bit lower usually, right? This is why it's advantageous to take debt. Is your cost of capital is, say, 10%. Your interest rate is 5%. But if you take leverage, if you take debt, and you take a lot of it, like maybe 70, 80% debt, you could get a ROE, return on equity, which is also on this side of the balance sheet, which is like 15, 20%. So that's the definition of that's my definition of leverage in finance, using these different leverage ratios. Anyway, without confusing ROE versus interest rate versus cost of capital, let's just assume it's all kind of the same thing. Return on your asset, ROI, return on your investment. At some point, people are going to understand that Bitcoin is like the ultimate asset. You hold the Bitcoin, everything else will decrease in price versus Bitcoin. Things will get cheaper versus Bitcoin. But the hiccup, the interesting thing is that Bitcoin is not consistently greater. The rate of growth will fall, but businesses will start to need to account for that year in, year out. I mean, if everybody's on a SAT standard, everybody knows it's a SAT standard. You can't just take a simple boilerplate loan or investment contract and say, give me 5% per year or something. Because the rate of growth of Bitcoin actually declines. Now, maybe people will just continue to do that. They just shoehorn an approximate Bitcoin return in versus other assets. But, scientifically over time, Bitcoin is still way better than most assets. And it certainly was here, way better than most assets. And it will continually be better than most assets. But it will decline. Its expected rate of return will decline. So that's kind of a hiccup in normal business calculation. I think that will be a constant for a long time, is the volatility. It's confusing to people. They don't understand it. In fact, I think it'll be a really long time. Based on this chart, it's going to be a really long time. I agree. Also true. So this is an interesting question, because I don't see governments giving up the power to print or the power to issue currency. Which is the same thing. Oh, what's this book? I got to find it now. When Roosevelt devalued gold from $20 an ounce to $35 an ounce, there was a Supreme Court major issue. I mean, it was a major issue for all businesses in the United States at the time, let alone the fact that it was the Great Depression, but also there were contractors around the world, both in the United States and outside the United States, that were contracted with businesses that had the contracts. There were both. I don't know. There were both. There were some that were written in gold, some that were written in dollars, but everybody understood that the exchange rate was $20 an ounce. So when you devalue that by 67%, whatever that is, that's a problem. It's a problem for bondholders in particular of companies, because they expect a return based on that exchange rate, and that exchange rate, but it was changed. Now, this is a totally different world that we're in now. Obviously, we have free floating exchange rates. There's no pegging to the dollar. But maybe we'll go back to some pegging of the dollar, and then you would have this issue again. But if you don't peg to the dollar, you'll still have this issue of understanding for value, the loss of purchasing power over time generally. So right now, roughly, the way that businesses and everybody, entrepreneurs, investors, deal with the loss of purchasing power and just the rate of the cost of capital is they have these constant rates in their contracts. So like, either I give you money, you're going to give me back 10% more in a year from now, or maybe there's a convertible note structure, all sorts of ways to do it. But Bitcoin doesn't have that constant rate of growth feature. It is power growth. So It doesn't work like a compounding growth loan. I need to find this book and share it with you because it's a great book. It's written by an Argentine economist. I think I've mentioned it before. Yeah. American default. This is a great book. I would recommend if anybody's interested in this. This guy's Argentine. I'd like to interview him, actually. Untold Story of FDR, the Supreme Court, and the Battle Over Gold. So it was a huge deal that the United States government changed the nature of the dollar because there's so many international contracts in dollars. Some might have been in gold, but mostly I think they were in dollars, and it was understood that dollars represented this much amount of gold. Everybody knew we were on a gold standard. And so when that changed, you're losing the value of your contract by fiat. And so that was a major thing. And I believe, I got to read this book again, but what I recall is at the end of the day, the court gave 3 opinions and didn't do anything. Like basically they didn't take any action. There were 3 opinions. There were 4 judges that were against it, 4 judges that were for it, and 3 opinions. 1 opinion for, 1 opinion against it, and then the 3rd opinion was like neutral by the Chief Justice. Let's see if we can find. Let me just do a. Yeah, Perry versus United States was the main case. So ultimately, the court sided with the government, as you'd expect, right? But it was very tricky and dicey, and there were 3 opinions issued. You say no recovery for the bondholders. Despite the ruling that the joint resolution was unconstitutional for public debt, the court denied bondholders the right to recover damages based on the invalidated gold clauses, arguing they had not suffered any actual loss because the currency they received was deemed to be of equal value to the gold they would have received, which is obviously a false statement. When they received less, like they did not. This was also a big finding, that the government has broad power to regulate the currency, and the devaluation of gold did not cause actual financial harm to bondholders. I need to reread this book myself, but it's a very good coverage of the whole saga. Very good coverage of it. Yeah, and he will probably, and we're not going to have anything like that right now because everybody has there's free prices everywhere. But because there are free prices, business contracts are still going to have to figure out the value of the dollar or of an investment. And if it becomes pretty clear that Bitcoin is on this certain trend, especially if you start denominating contracts in Satoshis, then you'll need to think about that. You actually need, according to the power curve, you will need less. It's a strange thing to say, but the borrower of Satoshis will need to pay less each month than he paid the prior month to equal a consistent cost of capital. If you want to get a fixed rate, you pick some fixed rate. Like I said before, if say it's a 10-year loan and say the initial expected return of Bitcoin is 30%, but then it will fall to 20%. Everybody sort of knows this. It's understood in the market. Then you could just shoehorn in, I don't know, whatever it is, a fixed interest rate of 27.7%, but that might not actually even match the economy as this time goes on. Like, Bitcoin really could be this amazing measuring stick. Is really the wrong word to say for money, but it's a way to understand how prices work. Let me see if I can explain this another way. One second. So here's another way of talking about it without using an interest rate, but it's the same thing. So with gold, it can be pretty volatile, and you might not have, nobody contracts in gold, but they do contract in dollars. But let's say people demanded a gold-like return. All right, well, the interest rate here is 5.1%, right? That is the lifetime trend line of gold since it's been freely floating. So let's just say it's 5.1% is the return people demand. It's the black line. Also, it's the slope of the curve of this black line, 5.1% per year. In other words, every 14 years, your investment should double. So if you're a normal investor making deals, and this is just generally your hurdle rate is 5.1% per year, that's what your contract will sort of formulate at the end of the day. It's what suppliers will raise their prices by. It's what people sort of generally understand. Everybody I know has different rates of return in their head, but you gravitate around what works for you. But it's a year upon year thing. At the end of the day, you expect your capital to double every 14 years. And now I need to have doubling time here with Bitcoin. That would be helpful. Bitcoin at the moment doubles every 2 years. I need to put doubling time here. That'll be a better way to show it. All right, so 45% per year, roughly, right? to doubling every 2 years with compounded growth. And then it will slowly go up to 3 years, 4 years, whatever it is. When this finally gets to 10%, which is in the year 2070, that's a doubling every 7 years. That's a long way out. And it's still better, by the way, than gold has ever done. God, where's my damn? Did I just delete it? All right, it's still better than gold has ever done here because this is 5%. 5% growth rate is this curve. It's just a different way of growth. No financial asset that I've ever seen grows like this. So people are gonna have to figure it out, but it's different. Yeah, but you know what's interesting is Mises actually said that money is not a measuring stick because a measuring stick would be something like a meter or a liter, something that's always the same to everybody at all times. And money actually doesn't do that. Even Bitcoin, gold, the dollar. It changes depending on certainly the time that you're in and the place and who you're talking to. So, you know, you can debate the term. I don't mind the term measuring stick, but I guess Mises and some of the classical people say it's not the best term because with money, you can only look at one thing ordinally at a time, right? You can look at, you know, the best you can hope to do is get something like this, a compounded figure of what it's going to gain you over time, which is the rate of interest of the cost of capital, which in this case is 5% per year, 5.1% per year. That's the lifetime gold growth rate, translates into 14 years, doubling. But if I tried to apply that analysis to the stock market, I'd get a completely different figure, right? So it doesn't exactly work like a meter or a liter or something in physics where that's the same thing to everybody no matter where you are, right? Like it's a liter is the same amount of fluid that a human, you know, if a human is approaching a liter versus an elephant or something, like, yeah, they're going to drink different amounts of it, but it's universal. It's not going to change. A liter is a liter is a liter. Meter is a meter is a meter. It's just not the case for money or anything of value. Yeah, I'll have to look at that. Yeah, I mean, it's not me, honestly. I'm just quoting. I can't find it's in his theory of money and credit, and the free market people like that. It's a reflection of subjective value, right? It's like I could take in money, whatever it is, a euro to the baker, and even at that moment, the baker prefers my euro more than his bread. I prefer his bread more than that euro. So in that moment of time of the trade, by definition of subjective theory of value, we both have a different understanding of money, a different understanding of value, even. Hopefully, it's coming across. Yeah. So what I showed here. Let's take off the doubling time. It's just let's take off now the price of gold. Let's take off even the trend line of gold. With all assets, stocks, bonds, gold, you collapse to something like this, a straight line of some rate of return. It's not always going to be that rate, of course. It's going to be up and down, but over the long term, it's a straight line. All right, that's what I'm showing is different here with Bitcoin. Bitcoin is not exponential growth. And I would portend to most people, to all you guys watching this stream, that 99% of even Bitcoin experts that you hear don't even understand this concept. That this is the way that Bitcoin grows. It's just different than a TradFi rate of growth was just constant. There is a figure you can get to which is proportional, or let's say there is a figure you can get to, remember, which I've talked about, which is a fixed figure. Bitcoin, it happens to be 12.7%, but that is a increase in time. So this is that proportionality of the power curve. So power curves, power laws, they mean proportionality. So every 12.7% extra time in the life of Bitcoin, the price doubles. So this is what I'm saying about contracts. It's just a different way of thinking than any other like contract that we usually think of. He says, Mike Maloney says Dogecoin is going to 10,000. Is that what I understand? I haven't followed that guy in years. Big gold bug. Newsletter writer. If there's one thing I can do on this channel is warn you of newsletter writers. What is this nonsense? This is Mike Maloney, the old gold bug. He still thinks silver's going to like 1 million. I'm just happy to warn you about newsletter writers. They're never going to give you charts as awesome as this. Information is out of date anyway, like the second you read it. So you can just come here every day and I'll give you new charts. I'm the anti-newsletter guy. You guys tell me when you can find someone who's elaborating the concept like this. Brass tacks, Bitcoin's a better investment now than anything else in the world. That's for sure. No matter what Mike Maloney says. We're at 45% per year. So notice, I got to move my tooltip. That's annoying. It's right in the middle. Notice that Oh, Mike McLone. I don't even know who that is. All I'm trying to say is, and I'll keep coming back to this theme, is this is TradFi, right? We think in terms of this constant percents per year. We may change it from 7 to 8% or whatever, but the net effect is a constant, continuous compound growth. That's the way we think of things. And it's actually the way the world works in the financial markets. But Bitcoin has objectively followed a different type of curve. And how that portends for financial contracts in the future, I think, is up for debate. Exactly. Scale invariance is what Bitcoin is. You can get to a constant number with Bitcoin growth, but it's a constant increase in time, which is 12.7%. And of course, when you do the map of 12.7%, it's going to be a variable number because it's a proportional number. The word with power curves is proportional. So after 569 days of Bitcoin, which this is just starts on Bitcoin Pizza Day, but it took, after 505 days, it took 64 days to double. After 569 days, it took 72 days to double. And so on. 641 took 82. Now we're at the point right now where roughly, right, you just pick your period, but we're roughly 6,000 days of Bitcoin. So it's going to take 770 days to double. $762. As someone who has studied like the markets and compound growth a lot, I think this is very interesting because there's not an asset that does this other than Bitcoin. Yeah, I'm probably ahead of the. Well, I actually know that I'm ahead of the curve. It sounds a bit arrogant, but let alone how it's going to grow is a good point. Like they do not understand, how transactions work on the Bitcoin network. They don't understand UTXOs. They don't understand you destroy a UTXO and send change to yourself every time that you make a Bitcoin transaction. They have no idea how any of that works. So, yeah, it'll take a while before people start to financialize around the idea that it grows at a variable rate. I should probably write this down at some point instead of just making videos. But TradFi grows at a constant rate. Bitcoin grows at a variable rate. Or a better word is a proportional rate. Bitcoin grows at a proportional rate relative to its existence. super bullish, super early. Let's go log right. Here we go. You can see it. Presumably, if we get enough data here, this would grow in power as well. Which is the proportion of Bitcoin reserving central bank money. Whereas gold itself is really just it's a linear function, really. It's a percentage of one. Yeah, I understand. Well, we got time. Fair value. Any purchases under this black line are a win. Probably even at this black line are a win, considering that the black line increases $100 a day. Not financial advice. I think I'll leave it here, guys. For the weekend, for the 4th of July. If you're American anywhere, happy 4th. Hopefully, America will not continue to go down the dark path, especially with helping Ukraine. But we'll see. Where do I want to leave it? Super bullish on this one. Not on that one. Why can't I find it? Gosh darn it. On this one. This is going to grow. Gold is going to grow. 15% right now. Bitcoin reserves only 0.2% of fiat money that's been printed by central banks versus the Bitcoin that they hold in reserve. Yeah. Unfortunately for our European friends and for our Ukrainian friends, you have to just not rely on the United States. It's very sad for me. It's jarring for me growing up in the US, but that's where we are. Thank you to the Danes, as always. Talked about this at the beginning with Anders, but it's a great story here. Really wonderful story from this Jens Thompson. Thank you, Dan. Appreciate it. You as well. I will be here. Let me know if you guys want to chart anything else or talk about anything else. I know I need to explain this better, and I'll try, but this is the best that I can visualize it, actually. TradFi versus Bitcoin. All right, guys. All the best. Have a great weekend.